What's up, everybody? Alexander Fibonacci, the day trading champ here today, and you clicked on the video because you want to know what is the best chart pattern to trade right now. And guys, I promise you, you stick around to the end of the video, you're going to know exactly what that chart pattern is and how you can start implementing it to make money next week. Alright guys, I'm going to get straight into what exactly this chart pattern is, and I'll tell you right now, it is the double top chart pattern. This is nothing mind-blowing. Some of you may use it already, but I'd say a majority of people don't use it because a majority of traders only play to the upside. Now, guys, being a good trader, or being a shark that I am on this channel, and I hope to make you guys sharks, because instead of being a bull and a bear, why not just play both sides? Because as you can see on the charts, there's plays to both sides. You see spike up, you see spikes down. So you can make money on both sides. We can be sharks and we can eat the bulls and the bears during the trading hours. But I will say that if you're looking from a perspective of money to time, then you're going to make a lot more money with one big drop than you are going to be with one big rise in a stock price. Because if you know that stock prices, they drop way faster than they rise, then when it comes to weekly options, you know that time decay is a huge factor in the value of these options contracts. So a 30-minute drop to drop 30 points is going to be absolutely ridiculous on your contracts, whereas to gain 30 points on the market, that might take all day for it to recover. You see what I'm saying? So that's why if you can time these as an options trader, it's going to be a lot more profitable than buying calls. Now, there's a time and place for both puts and calls, and right here with the double top formation, puts are appropriate. So they're extremely profitable if you know how to time them, and that's why I'm going to explain to you this chart pattern and how you can use it, and I'm going to show you the mistakes that I see a lot of people using with double tops and why they might not be profiting with them. So let's get into this first example just on the S&P 500. This is /ES. It's the index futures, guys. It's the same thing pretty much. But you see here, first time we're double topping. So here's like an uptrend. So we have not topped anywhere yet. So this is the first top. Then we drop off. Then we show market strength here with this candle. Then we come back up and top again. But this time, we drop significantly lower. So that is super easy trade to take if you're looking at this. Now you can be looking at the VIX and other things to help you see this double top. But I mean, guys, you can get a very novice trader to do this. You watch out for the double top and you wait for some bearish candles to be forming. You make sure it's showing weakness and that it's not going to break through this double top. And that's when you can confirm your play and you can hop into some puts. Now, here in this market condition, our average true range, which I'll pull up for you in a sec, has been pretty low. So the moves that we're getting lately in the market haven't been too crazy, although it is starting to pick up finally. We got the VIX starting to ramp up. So the moves are starting to get a little more significant. But you would want to, if you're looking at it here, you have not seen this whole drop here yet, right? So because no one can tell the future like this, you know what I'm saying? So you're going to want to get a closer to the money strike. Why? Well, if you're a new beginner trader, I'll explain to you right now, is the closer to the money they are, the faster they'll pick up value in the short term. They don't have to travel a crazy amount to get to the strike, so they're going to increase the value quicker, although that does result to less percentage gains in the long run because you are buying them for a more expensive price. But say you are topping here again, you see these bearish reversal candles, you're seeing that it doesn't look like it's about to break through this double top again, and you see that there's a high probability for it to move lower again because this is the second top. So you buy some puts, you get some strikes very close to the money. So here, if it's at 34.97, you might want to go with some 34.95 strikes. Or you might want to go with some 34.90 strikes. And guys, you'll get a quick move lower if this thing is showing any weakness at the double top. You get the quick move lower. Say your contracts, pick up even 25 or 50% of value in such a short little drop. Dude, that's huge money. Now, if you're trading with a smaller account, 25 to 50% on some contracts is awesome. With a big account, same thing. So you're looking at this chart and you see how quick this happens. You can cash out and go do whatever you want for the rest of the day. So that is an awesome trade you can take here. That's just one example, and I'm going to go over some mistakes you could have made here on this exact chart pattern we're looking at. Alright guys, the first mistake you could have made here was refusing to short, because so many people only want to buy calls. They only want to play to the upside, because what does the market do? Well, most of the time it's going up, so it seems like the safer thing to do. But guys, it's just like if someone offered you a Ferrari on this drop, but you're like, nah, it's okay, I'll wait, and I'll buy the dip. And now you just got a Toyota. This is a Ferrari, this is a Toyota. This drop is worth way more than this rise. First off, this rise doesn't even get back up to the same level. And second, it takes at least double the time. I mean, look at the steepness of this compared to this. So when trading weekly options, time is a huge factor in the contract value. So the faster move happens, the faster you can get out, and the faster your contracts are going to increase in value. And for the people who are buying calls, their contracts are going to be worth a lot less because it takes so long to get here compared to this significant drop. So stocks drop faster than they rise, and that's why you could be cashing in on a Ferrari instead of a Toyota. And second big mistake you could have made was thinking that this was the fifth top and not a double top. Guys, every single time it's rising here, which these were actually pretty sweet shorting opportunities, but if we're talking about a true double top, this was the first double top here. These were not part of it, so this would be the double top, and that is, the first mistake you could have made was thinking that these were all the same tops when they're not. Alright guys, I want to give you one more example today, and trust me, if you're subscribed, you're going to see so many more in the future, so make sure you are subscribed if you want to see that. But guys, this stock pattern is so good, it works on the beast like Tesla. I mean, stock like this that is almost doubled in price in just 20 days, guys. I mean, that's how good the stock pattern is if you study the context of the market and understand what's going on. So we know that the stock split for Tesla is almost over. We know it's already pumped in so much juice, and I mean, I guess you could say steroids into the stock until the split. And now you're looking at the chart and you're like, holy shit, that sold off so hard here. Sold off, how many points is that? 150 points in like 30 minutes. So clearly there's a reason why people don't want it at this price and why it would sell off so hard. So the next time we're rising here, we get to this price, you start seeing these bearish reversal candles. You see these wicks sticking out like crazy. And that's your first signal to know, once again, buyers don't want it at the second top. So now you're at the second top, and yeah, this time it takes a little bit longer for the decline on this double top, because there's probably a lot of pesky investors who really want to stay in Tesla, but there's just too many institutional investors who want to get out at this price, as was demonstrated before. So we get back to this price, and guys, nothing about the company has changed. It's not like there's better news, better anything to push it forward. So we're at this price again, and institutional investors, all right, let me take my profits again. So now we finish back at even lower than the day before. So that's how good this chart pattern is if you're looking at it the right way and you actually understand, why is the market moving and why would it stop moving that direction. So you see that here because, clearly a huge sell-off like that, people don't want it at the price, and at this price they don't want it again either. So that's just, one way to look at it, and let these charts speak to you. Let them tell a story, and if you, start looking at them like this, I promise you these double tops will make a lot more sense. Alright guys, I told you before in the video that I'd point out the average true ranges on the S&P 500, and you can see it's decreasing over time. So that just means that the range that we're trading at is a lot smaller every day. So that's why if you're doing these short intraday day trading options, you're going to want to buy closer to the money strikes, because you have a lot higher probability for those to actually gain some serious value. Whereas buying in, if you buy a strike that's $35 out of the money, well, good luck with that, because the true range is $33 lately, So just the chances of a stock price, or the futures or the S&P 500 shooting that many points is just not not real right now. Whereas if you're buying 30 strike out of the money puts over here when the true range was at 150, of course that's a feasible move. But right now it's not. So you're gonna want to stick to, close to the money options and take your profit and be happy. But that's what's so good about being a shark. It doesn't matter what the market conditions are. We just adapt, and you know what? We take advantage of the bulls and the bears, and we take advantage of both sides. And second, we got to point out how on Tesla, if you short one of these double tops, look at the true range on Tesla. It's 110. So the moves here are going to be even more significant, even faster sometimes, and that can be even more profitable. Only thing I'll say about Tesla is the option prices are extremely expensive right now, heading into that stock split and everything, and with all the momentum and the IV on this. But, still extremely profitable if you use it right. So it just shows, it doesn't matter what you're even trading here. If you know how to use the double top, the profits are going to be there. So I told you at the beginning of the video, you know exactly how these double tops form, and you know exactly how to execute on them. So I'm pretty sure by the end of this video you now know why that is and how it works. So if you want to watch more videos like this, make sure you subscribe to the channel. And I'm Alexander Fibonacci, the day trading champ, and I'll see you guys on the next one.